Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 26th of August. I'm Caroline Hepker in London.
And I'm Stephen Carroll. Coming up today, Donald Trump says he's firing Federal Reserve Governor Lisa Cook, but she insists he has no power to do so and refuses to quit.
French assets sell off as the country's Prime Minister calls a confidence vote that may topple the government.
Plus, the grass isn't always greener. Why an artificial turf producer encapsulates the US tariff pressures squeezing European firms.
Let's start with a roundup of our top stories.
US President Donald Trump says he's firing Federal Reserve Governor Lisa Cook. In a letter posted on Truth Social, he said he had sufficient cause to remove her, citing allegations she made false statements on mortgage loans. Cook has pushed back, saying Trump has no authority to fire her and that she will not step down. Her lawyers say the president's move is illegal and vowed to take whatever actions are needed to prevent it. Danielle DiMartino Booth is a former advisor to the Dallas Fed.
12 months ago, I would have never thought that I would have seen this happen, much less see the head of the Bureau of Labor Statistics be called down from her post as well. Everything right now makes us very nervous, including whether or not there's a next person who may or may not be in the crosshairs.
Danielle DiMartino Booth there, who's now CEO of QI Research. If he were to succeed, the move could give Trump a chance to name someone to the Fed board and secure a 4-person majority on the Fed's 7-member board of governors. While a president has never removed a Fed governor from office, one can do so for cause. However, according to Bloomberg Intelligence, the mere allegations of fraud are likely insufficient to meet the for-cause removal standard.
US President Donald Trump has threatened substantial new tariffs and export controls on countries that impose a digital services tax on American tech companies. In a social media post, Trump said that he would introduce export restrictions on highly protected technology and chips unless the, quote, discriminatory measures are removed. Polka Mishra, partner at Javelin Wealth Management, says the eventual impact of the threat still isn't clear.
So I think it's still, again, about deal making. Canada did give in on the digital tax, but Europe is holding firm. So we feel that you can't make long-term predictions based on a tariff being announced or threatened now and then being taken off again or some deal being struck. So I still think that it's probably going to be, again, a negotiation, some deals being struck, but it's not going to impact the AI rally or the AI story significantly.
Polka Mishra, partner at Javelin Wealth Management, speaking there. Trump has long argued that digital services taxes discriminate against US tech giants, but European countries, including France, Italy and the UK, have maintained their levies as international talks over how to more effectively tax multinational giants in a digital age continue.
French Prime Minister Francois Bayrou has called a confidence vote for the 8th of September that could topple the country's government. The news prompted a sell-off in French assets, with stocks falling and bond yields rising. Speaking to reporters in Paris, Bayrou said the action was necessary.
This is why I asked the President to reconvene Parliament in an extraordinary session on Monday, September 8th. I will engage the government's responsibility on that day with a general policy statement in accordance with our Constitution. This general policy speech will pose the central question: whether the danger to the nation is serious, whether there is an emergency or not, in order to choose a path to regain control of our public finances.
Francois Bayrou there, speaking through a translator. France's far-right National Rally Party, the leftist France Unbowed, and the Greens all said they would vote against the motion, while the Socialists said they wouldn't back the government. If a majority of lawmakers fail to support Bayrou, he'll be forced to submit his government's resignation.
Here in the UK, grocery prices are accelerating as retailers contend with poor harvests and higher operating costs. The rate of food inflation hit 4.2% this month, the highest level since February 2024, according to the British Retail Consortium. Retailers have warned that price rises could hit 6% by the end of the year as they contend with increased payroll taxes and a higher minimum wage. They are arguing and urging, the government not to raise taxes on retailers in the autumn budget.
Young people in the UK are facing the worst jobs market since the pandemic. Youth unemployment reached 14.1% in the 3 months to June, a 2-point rise from pre-COVID levels. Bloomberg's James Woolcock has more.
First-time job seekers are often the most vulnerable to hiring freezes. After Labour upped payroll taxes, employers are pausing hiring to cope. That's according to job search website Adzuna, who say entry-level roles now account for just a fifth of all vacancies. That's the lowest share since October 2020 and well below the post-COVID average of 27%. The drop comes as experts say AI is starting to distort the jobs market, with entry-level roles being less sought after. In London, James Woolcock, Bloomberg Radio.
Elon Musk is suing Apple and OpenAI, arguing that the companies are harming consumers. The billionaire founder says that Apple's decision to integrate OpenAI across iPhones is thwarting competition from others like Musk's X and XAI. Bloomberg's Mark Gurman says the question is if Apple actually breached antitrust rules.
Elon is right. They do give pretty hot promotion to some of the other AI companies in the App Store. They haven't done a lot of that promotion for Grok, and so maybe we'll see more of that from Apple. But all in all, I find this lawsuit to be frivolous. I don't personally consider it an antitrust situation, but it's obviously not up to me to decide. And it is a little surprising that Elon Musk actually went through with this.
For Mark Gurman, the case sets up a high-stakes legal battle between the richest person on the planet and one of the world's most valuable companies. A spokesperson for OpenAI told Bloomberg this latest filing is consistent with Mr. Musk's ongoing pattern of harassment.
Those are your top stories on the markets. The Bloomberg Dollar Spot Index, 0.1% weaker. The 10-year Treasury yield up 3 basis points in trading this morning. Looking at the European session, we're going to be watching the euro, currently 0.1% stronger against the dollar, 116.32 this morning. The CAC 40 in Paris finished down 1.6% yesterday, and European stock futures are pointing 0.5% lower for the Euro Stoxx 50 today.
In a moment, we'll bring you details on President Trump's escalating attack on the Federal Reserve and a special report on the fallout of US tariffs on EU exporters. But another story's caught my eye this morning. This is the new craze. Well, it's been going on for a few months, but it's really crazier than ever. This is Labubu's, Pop Mart's plush toys that are sold in these mystery boxes. They're kind of blind boxes. They are being bought, sold, resold for astronomical sums.
Yeah, I mean, look, if you've managed to escape this trend so far, I congratulate you for hiding in a corner of the internet that I certainly haven't found. But look, what I'm really interested in, the piece that our colleagues have written about this morning, is how it compares to, because there's a lot of people drawing the comparison to Beanie Babies.
Yes,
remember them?
Yes.
Look, is this the same as Beanie Babies? Apparently, much faster and much more dramatic increases in sales, because that's the way the internet cycle works now. But a lot of people who are buying and selling them now, because the story is a lot about the resale that's going on as well, and the secondary market for Labubus. I don't think there's a ticker for that yet, but we may have one in a couple of weeks. But the idea that people realise this is something that's not going to last. This is not the buy, keep for 20 years and then buy a house sort of fantasies that people had about Beanie Babies.
No, but it's also about intellectual property. And it's interesting that this is a Chinese cultural phenomenon that has actually broken through into Europe and into the US. You know, is it a rival to Disney? Look, on the way back to London, I got on the plane with my kids, and of course the person in front of us in the queue had a beautiful Louis Vuitton bag
with
and dangling.
Yeah,
it was a Labubu.
But was it a Labubu or was it a Lafufu, which is a fake Labubu, which is even more of it. Anyway, there's also some very interesting thoughts about how this isn't necessarily a very deep trend. There isn't a huge market behind it if you compare it to the likes of Nintendo's Pokemon as well. So that's a whole other question of kind of how you actually develop this into a market. A great deep dive into the business behind Pop Mart and Labubus. You find it on Bloomberg.com, and we'll put a link to the article in our podcast show notes as well.
Now, President Trump says that he has sufficient cause to fire Federal Reserve Governor Lisa Cook. In a statement, Cook says Trump has no authority to do so and she won't quit. Joining us now to discuss is Bloomberg's chief Asia correspondent, Rosalind Matheson, to talk about the story dominating this morning. Ros, I think we should start just by talking a bit about who Lisa Cook is and what President Trump's allegations against her are.
Well, as you're saying, she serves on the 7-member board of governors, and they, alongside some of the Reserve Bank presidents, make up the FOMC, which is the committee that sets interest rates. And obviously, interest rates are very much in the crosshairs for the US administration led by Donald Trump. She had a short term that ended in 2024, and she's been nominated for a new term, which is not due to expire until 2038. She came in at a time when rates were being hiked. We know that she's held concerns around inflation, although we don't know what her intentions might be for the next rate-setting meeting in September. But obviously, she is someone who's drawn Donald Trump's ire. I mean, she did serve on Barack Obama, the former president's Council of Economic Advisors. She has also worked at the Treasury Department, and she has a doctorate degree in economics. So she does have the credentials there, obviously, for her position. Donald Trump's accusation is that she essentially took out mortgages on more than one property at the same time, declaring those to be her primary residence. So she had double mortgages on alleged primary residences. And that's the accusation that is being levelled against her. She obviously has denied that. She said she'll bring out her evidence against it. She's obviously also refuting Donald Trump's efforts to fire her.
In terms of the legal machinations here, Roz, what exactly can Lisa Cook do to protect her job, or what standard does Donald Trump have to prove to be able to have the sufficient cause to fire Lisa Cook?
Well, right now there is the possible DOJ investigation against her, but she's not been charged with anything. So what she could do is immediately look for an injunction to reinstate her while court action goes on, and court action could take quite some time. As you said, that the question is, can Donald Trump fire her for cause? And there are various things that make up that description for cause, including inefficiency, neglect of duty, and wrongdoing in office. And the question is, in any of that, does she meet the bar with these accusations? But really what she can do is draw this out quite extensively through litigation and all the way up to the Supreme Court. And the question is, what does the Supreme Court see as the issue of full cause? So this could become a protracted legal issue either way. And as I said, no charges have actually been laid against her.
No, indeed. But this is also President Trump pursuing a goal that we know he has in terms of wanting lower interest rates. What does this mean for Fed independence and for the rate path?
Well, that's right. So obviously, this is a key part of Donald Trump's efforts to reshape the Fed and especially the Board of Governors, and have a majority of people on that board potentially who share his points of view about interest rates. I mean, Aaron Klein, who's from the Brookings Institution, describes this as a kill shot, quote, at Fed independence. And basically he's trying to reshape the Fed into his liking. And the markets obviously do not like that. You can see the reaction so far in financial markets in the aftermath of Trump's announcement in terms of the dollar and treasuries. And really, this could raise further fundamental questions about the independence of the Fed. You even had S&P Global Ratings recently warning that, this could be a factor for the US sovereign credit rating if you have the idea of perception of the erosion of an independence of American institutions. The question is, would it have any impact on the next interest rate decision? Unlikely, especially if she's still in place. And as I said, we don't know how she intended to vote or would intend to vote in that meeting. But certainly in the longer term, there are fresh questions about the independence of the Fed as a result.
Okay, Rosalind Matheson, our Chief Asia Correspondent, thank you very much. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, the European Union agreed a tariff deal with the US in late July. It has meant some predictability for businesses, but also hard choices and lingering doubts about whether the US will stick to this tariff rate of 15%. Joining us now is Bloomberg's reporter in Amsterdam, Charlotte Hughes-Morgan, who's been doing some deep dive reporting on this. Charlotte, welcome to the programme again. What have businesses been telling you about this 15% tariff being imposed on most European products?
Thank you for having me. Well, yes, I mean, it's safe to say that there is a lot of gloom amongst European business leaders at the moment. There's this kind of gloomy resignation and a sense of frustration that obviously, these trade tariffs are outside of their control, but they have a huge impact on their businesses. I mean, for a lot of these European companies, and we talk to companies kind of outside of the major sectors that you tend to think about when we read about trade tariffs. We tend to think about semiconductors, pharma. We spoke to a really wide range of companies that are still really important for the European economy. And so many of them have really complex supply chains, and the US is a really significant market for a lot of them. So this is a real headache. And I think what we wanted to do with this reporting is really dive a deep dive into the day-to-day decisions that these business leaders are having to make. And it's really tough. I mean, for some, this is kind of yet another headache after the supply chain disruptions of the COVID years, and then you had inflation, and now these tariffs are kind of muddying the waters again and making it really hard to make those long-term decisions that are crucial for kind of any well-run business. I think another thing to add is obviously the macro uncertainty, this kind of caution that's crept in to the market. I mean, some people we spoke to said that's almost more painful than the tariff rate itself. So many customers are holding back on investment, and that is really kind of having an impact on these European companies.
Charlotte, among the companies that you spoke to for this story as well are makers of artificial turf underlay and grass used in the United States and other places as well. I mean, talk to us about how these businesses are adapting to these changing tariff rules.
Yeah, I mean, that was a really interesting business. Again, as I said, not something that always springs to mind immediately when you think about the tariff conversation. But yes, this turf business that manufactures artificial turf for stadiums around the world, but particularly in the US, 75% of its revenues come out of the US. And so they're having to do some really kind of hard thinking. When we spoke to them, I mean, they said they have a laser focus on pricing. So they're constantly thinking about, how much of the kind of tariff cost can they reasonably pass on to their customers in the US? How much can they absorb? They have factories in the US, so they're shielded from the kind of tariff impact to some extent, but they're a vital product. I mean, these are really complex products to make, and some elements just can't be made outside the US. So they're having to think about how they kind of pass on those costs to customers. They're also having to think about their investment decisions. Where are they going to invest? Are they going to relocate some production to the US? I think that company in particular said, that's not feasible for us. The cost of relocating our factories, the difficulty finding the very specific expertise that we need to make this complex product over in another country. I mean, so they are kind of doubling down on their European operations. But others, we spoke to a German medical equipment maker, for example, who are actually going to focus on building up their US operations. But again, that's a really long-term project. I mean, these businesses have really long timelines, and the cost of doing so means that they'll have to divert some money that would have otherwise been spent on innovation and research. So that is, again, another kind of knock-on effect, is that a lot of the time and the money that could have been used for growth and for building up these businesses is being spent trying to mitigate tariff impact and trying to work out, the logistics of kind of still exporting to the US.
When you add all of this up, what are the macro implications and the impact of this?
Well, I mean, if you ask the European business leaders, it's negative. I mean, I think, as I said, even just that point, the money that's being spent on these tariff decisions, the logistics and the time, if that is moving away from innovation and kind of dampening growth, if you think, say lots of companies in Germany's industrial heartland start doing the same thing to try and grapple with the tariff impact, that obviously would erode Europe's, some of Europe's industrial centers. You've also got the pricing conversation. If you're having to pass on some of this cost to US customers, I mean, that eventually passes on to the consumer. So you have that kind of uptick in prices for the end consumer in the US, which obviously could have this kind of knock-on effect on inflation. If you look at the mood music overall, it is negative, and that broader caution. I mean, even today we saw Trump saying he might impose tariffs in retaliation for the digital services tax. So you think you have this certainty with the deal that was agreed in July, the 15% tariff rate for Europe. But I think there's still concern among European business leaders that this might not be the end of it. And actually that certainty, that long-term visibility is really key for their businesses. And if that, starts coming under threat at scale, well, then that could be a huge problem for Europe.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.